Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. And I'm so excited and grateful for life to be with you here this morning, as always. So, in the next 1 hour, we shall be taking a fresh new look at the financial market where we shall be reviewing how well our existing position is doing and at the same time get ready strategically position ourselves ahead of the New York session. But before we begin, let's confirm that we are all on the same page here. So if you can see my screen and you can hear my voice clearly, please type in hi in the comment section and let's get this party started. So I would like to see some feedback, please. This gives me a sense of belonging that we are all on the same page. So I would like to see some feedback. So I'm trying to load up my comment box. Let's see what we have here. And all right, so I see Hamelero, good morning. I see 6153, good morning to you too. Nipsey, thank you very much. 4456, good morning to you, thank you. Ekari, good morning, and thank you very much. So I think this is enough for us to confirm that we are all on the same page. So it's on this note I welcome you once again to another promising edition on the X Trend Speed Live. My whole name is Sheriff Daramola, and for the next 1 hour I'm going to be your host as I take you through a trading journey into the financial market where we shall be looking out for trading opportunities ahead of the New York session. And of course, in preparation for today's live session, I have conducted a comprehensive price action based technical analysis on all of the assets on our watch list using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of all of these assets. Well, since the beginning of the week, we have been monitoring 4 major assets, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also have the GBPUSD, and of course, we have the XAUUSD. And in fact, the last 24 hours, we've had some sensitive data that have changed the landscape of the market in recent times. And one of them is the speech by the Bank of England governor yesterday, Andrew Bailey, and policymaker Swati Dingra, and he expressed its uncertainty about raising interest rate further, suggesting that the central bank will remain data dependent. Now, this has sent a lot of insinuations into the market. In fact, the market on the GBP is very fear dominated at this point in time, as majority are beginning to drop their position on the pound sterling as a result of this event. So will this bearish momentum continue to the downside, or will the pound sterling be cheap enough to buy at this point? Well, that we shall be looking at when we dive right into the business. And of course, we've noticed how the dollar had gained quite a lot of traction in the last 24, 48, 60 hours now, and coupled with the positive data coming in from the ISM Services PMI yesterday, things are looking very rosy for the dollar as at this morning. Will this continue? We shall be looking at that in a moment. Now, before we begin, let me shout out to my newcomers in the house. For those who are joining us for the first time, you are highly welcome on board. I never for once will forget you guys. Well, you might be asking, what is it that we doing here? Well, as technical traders, we gather here as a community in anticipation of the New York session, where we review our existing positions and at the same time get ourselves prepared for the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time, and I encourage you to stay tuned until the end of the session so you don't miss out on the insightful ideas that will help you make a well-informed trading decisions during the New York session today. And trust me, the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, guys, you are highly welcome on board. Now, as usual, the next thing we are going to be doing right now is to check on the economic calendar. And for those who have been following me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that will make us position ourselves ahead of the event, during and even after the event. So on the economic calendar, we shall be focusing on high impact events from the economies that affect the assets on our watch list. And for this week, we are going to be looking at both the United States and of course the United Kingdom. So for Thursday, September 7th, we have only one high impact event coming in from, hold on a second, from the Japanese economy, and that is the gross domestic product annualized for quarter two. And for those who don't know, this event is a high impactful event as it provides insight into the overall health of an economy, hereby impacting sentiment in the market and of course influencing our trade decisions. And of course, a higher reading is considered as positive for the yen, while a lower reading is considered as negative. Now, looking at the data we have here for the GDP for the Japanese economy, the previous data came in at 1.5%, and we have a consensus as economists are projecting a lesser figure for this quarter, that's 1.3%, which gives us a sign that the economy there doesn't seem rosy at this point in time. So we shall be looking forward to what the actual data will be. Will it be beyond expectations, below expectation, or even be just as expected? Then, coupled with the high impact event from the Japanese economy, we have a handful of speeches coming in from the United States. We have the Fed's ACA speech, we have Goldsby, we have Williams, we have Bostic, and we have Bauman's speech, all coming up later today. And in fact, everyone in the market will be looking forward to that event to have an insight into the health of the US economy and the potential of an interest rate hike later this month, and also give us an insight into the monetary policy of the Federal Reserve. Then another one is coming up in about an hour from now, and that is the initial jobless claim count. The initial jobless claims is released by the US Department of Labor, and this is a measure of the number of people filing first-time claims for state unemployment insurance. In other words, it provides a measure of strength in the labor market. A larger than expected number indicate weakness in this market, which of course will be influencing the strength and direction of the US economy. So generally speaking, a decreasing number is considered as positive for the US dollar. Now look at the data we have here. The previous data for the month of August came in at 228,000, while consensus are projecting 234,000, which is not something promising for the United States. So we shall be looking forward to what the actual data is going to be and how, if it's going to be as expected, below, or even beyond expectation. But as technical traders, what we are going to be doing in this session is to sniff through the current market structure and try to identify structures and patterns that we shall be using to guide our trading decisions for today. Now let's dive right into the chart. And the first asset we are going to be looking at this morning is going to be the US All Spot. And on the US All Spot, we've had quite an interesting situation going on in this market. As you will know, that since the beginning of this week, we have been buying that asset after a very long consolidation phase here. Now, let's run through what has been going on in this market since the beginning of the week and what led into the idea of buying this asset. Now, at the beginning of the week, we acknowledged a range where price was initially caught within the $85.45 level and the $84.55 area to emphasize the level of indecision at this point in time. And you know how we do it in this community. When we have this kind of range, we want to exercise patience, waiting for a signal which will come either in the form of a breakout or breakdown of that range to give us an opportunity to buy or sell. And in fact, we saw what happened here right here on Tuesday as we had our first buy position triggered, and since that moment we have been buying this asset. Now the first move moved significantly well, and you saw what happened here. Price moved over 200 pips in our favor before that bearish momentum happened. And of course, you know how we do it in this community. Whenever price moves significantly well in our favor, we always move our stop losses to secure the position. And if you had done that, you must have been taken out with a modest size of profit on that one. Then price action came back again into that area yesterday, and we also took advantage of a buy opportunity. And I told us all yesterday that for those who missed out on this opportunity, we want to be capitalizing on the next move had the breakout of the $85.90 level. And of course, you saw what happened here. Price moved again about 170 pips again before the bearish momentum began. And right now, for those who are taking advantage of that opportunities, well done to you for being on standby. So at this moment, we are on the positive side of our portfolio on the US All Spot. Now, going into the New York session today, what is our plans? Will the US All continue to find bullish momentum, or is it likely that sellers will come into this market, especially after considering the multiple rejection of the $87 mark? Well, the first thing I would like us to do here before going into the details of what our expectation is going to be looking like is for us to scale up into the higher time frame. Now, when we scale up into the higher time frame, let's go to the 4 hours time frame to be precise. This was where our analysis began right here on Monday. And of course, we observed how this market has been on a strong bullish momentum since the month of June. But that is not where our center of focus was. Our center of focus for this week was just right above that $84 level after citing the first breakout of that structure after a long time. Now, we saw the breakout of the $84 level, and at the beginning of the week, our center of focus was around the peak for last week's trading session, where we were looking forward to see how the market would react to that zone to determine what our next line of action would be. Now, one of the things we considered at the beginning of the week was a potential retest of structure before the uptrend happens, which of course has not yet happened. And the other one was what happened as we also anticipate a trend continuation pattern that inside that uptrend move. And right now you will see that the uptrend move still looks very promising at this point, as long as price still remains above that ascending trend line, above the key level. And to further help us guide our trading decisions, we identify the trend line which has been supporting this bullish momentum since the beginning of this month. And as you will see here, we have an ascending trend line, and price still remains above that ascending trend line. So the question going into today's trading session is, will price action still remain above the trend line for a new uptrend continuation, or are we going to be having a breakdown of that ascending trend line to give us a signal that we might be looking forward to a retracement move at this point. Now, how far will that retracement phase go if price ever breaks down that trend line is what we don't know. But one thing for sure here is that we have structures at where price action started the week, and of course the key level at the $84 area, where we shall be looking forward to see how the market will react to the zones to decide if we are going to be joining an uptrend continuation or an outright sell-off. Now, to have a better perspective into this, we shall be scaling down into the lower time frame. In fact, we have a level right here at the $86.50 level, which we shall be using as a yardstick. And as you can see, that same level shares a confluence with that ascending trend line we identified at the beginning of the week. So we have the $86.50 level marked out on our chart, and of course you do want to be marking out this level on your own chart as well. Now, scaling down into the 1 hour time frame, we want to see how market participants will be reacting to that level. I can't find my levels here on the 1 hour time frame. Let me do some. Okay, right now it should be there right now. So we want to be seeing how the market is going to be reacting to that $86.50 level to determine what our next line of action would be. So we have the $86.50 level marked out duly. So if buy pressure continues around this area, then we will be getting ready for another wave of bullish momentum. I want this trend line to capture all the pivot lows. So you can see how the $86.50 level and of course the ascending trend line here shares a beautiful confluence. Now, depending on how price reacts to this area will determine what our next line of action will be. And of course, you would agree with me that we are at a crucial moment in this market where both sellers and buyers have the potential of pushing price in their favor. Now, first of all, let's talk about the potentials of sellers at this point in time. Now, if we take into consideration what has been going on in this market since Tuesday's trading session, we saw that as soon as price tested the $87 area, we saw a sharp rejection by the sellers. Then we saw what happened here again during the New York session yesterday. We saw another sharp rejection of that area. Now, what does this tell us? It tells us now that buyers are finding it difficult to break out of the structure, and at the same time it reveals how strong the sellers are around the zone, making this area a selling niche at least at this point in time, unless that level is broken out of. Now, if we consider the continued selling pressure around the $87 area, there is a likelihood that we could see price break down that ascending trend line for the first time. Remember, we have this ascending trend line marked out, which has been supporting this bullish momentum since the beginning of this month. Now, price is back at that trend line. So we want to see what happens here. Is it going to be a breakdown of the trend line, or price will be respecting the trend line one more time to incite an uptrend continuation? So right now, what we're going to be looking at to sell the US All Spot is for price to break down the $86.50 level and of course the ascending trend line. Now remember, there are two ways to which we can capitalize on this opportunity. Now, if you have been with us since the beginning of the week, that is, you've been part of this profitable journey, then you must have scooped in a significant amount of profit. So we can afford to leverage on the profit we've made so far this week to test waters right below the $86.50 level to see if this move is going to work. So having a sell stop order below the $86.50 level for those who have a profitable position already makes quite a lot of sense around this area. And please don't forget to ensure that you have your stop losses in place. In this case scenario, we should be having a minimum of 50 to 55 pips stop loss on this one. Now, for those who are going to be joining us for the first time, that is, if this is your first position you will be taking on the US All Spot for this week, then you want to be patient for a retest of structure for confirmation before jumping into that position. So once you cite a breakdown of that structure, scale down to your lower time frame, 5, 10 or 15 minutes time frame, to look out for retest of structure, continued selling pressure, then we can join that bearish move to the downside. And in fact, we have multiple levels here, like the $85.90 level, as you will see here. We have the $85.45 area. If price action continues to break down the structures, we shall continue to add more sell position to our existing trade. So let's see how this is going to play out in the next couple of hours. So we're only looking out for selling opportunities as soon as the breakdown of that $86.50 level happens. So that is how we are going to be selling the US oil spot for today. However, if price action continues on the upside here, respecting that ascending trend line, I will be looking out for buying opportunities only when the $87 area is broken to the upside. In fact, I need price action to take out all the sell positions here to give me enough confidence to join an uptrend continuation. So we shall be looking out for buying opportunities only when the $87 level is broken to the upside. So let's keep this in mind. Let's mark these levels out on our chart, as we shall be needing them as a reference point to guide our independent trading decisions for today. So these are my views here on the US oil spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next financial assets. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, we shall be moving right into the next financial asset on our watch list. So the next financial asset on our watch list is the USTech100, popularly known as the Nasdaq. And in fact, we have a tremendously profitable position here on this asset. Now, before we go into the details here, I would like us to run through how the week started for us here on this asset, and what led to the idea of selling this asset. Now, remember, at the beginning of the week, we had scenarios where we bought, we sold. Both of them didn't work, as we saw price take us out of those positions before we finally saw this bearish momentum began yesterday. Now, at the beginning of the week, we acknowledged a range where price was initially caught within. As you will see, price was confined within the 15,525 level and the 15,475 level, to give us an insight into the level of indecision at the beginning of the week. Now, you know how we do it when we have a range like this. We wait for the breakout or breakdown of the range to give us an opportunity to trade. And I told us all on Monday that I already had the buy position triggered as soon as price broke out of that resistance line. And for those who missed out, that we shall be looking out for more opportunities to join that move, which of course did, and we saw price move about about 30 pips in our favor before the bearish momentum began. And of course, if you had moved your stop losses accordingly, the worst case scenario on that one would have been at break even. Then we saw price break down the support line of the channel. As you will see here, we saw the breakdown of the 15,475 to initiate sell positions. That one also moved about, how many pips was that? About 70 pips before price action came back to take us out of that position. So it was a roller coaster of buys and sells at the beginning of the week, as we saw the consolidation phase widen a little bit further between the 15,450 and the 15,435 since the beginning of the week, to further emphasize the level of indecision here. And during our live session yesterday, we said we shall be focusing on that area between the 15,475 and the 15,435. And with that scenario here, we had the buy positions triggered, of course, and we were taken out in a loss on that one. But fortunately, we saw price break down that support line at the 15,435 to signal a bearish opportunity, where we of course recouped the loss we incurred earlier to give us a significant amount of profit here. And if you are taking advantage of this opportunity and you still have your position running right now, you will be having about 150 pips in profit right now. And for those who still have a sell position right now, you do want to be moving your stop losses to secure this current sell position. And from what we have here, where can we move our stop losses to secure this position at this point? And remember, we do want to be giving enough room for price action to breathe as well. So I will be suggesting that anywhere above the 15,325 and the 15,370 seems most appropriate to secure this current sell position. Remember, we do want to give enough room for price action to breathe. So with that being said, and with a well secured position right now, what is going to be our next line of action? Well, first thing first here is to acknowledge the momentum in this market since last week Friday. And from an holistic point of view, it is quite clear that price action has been bearish since the last week Friday. And in fact, we have a trend line to emphasize its importance, as you will see here, after connecting the series of lower highs. Though we had a breakout of the trend line here on Tuesday, but it didn't last long, as we saw price drop back below the trend line. Now you know how we attend to our trend lines in this community, especially when we have an ascending trend line. We shall continue to look out for selling opportunities as long as price remains below the descending trend line. And since price remains below the descending trend line here, it makes quite a lot of sense that we continue to look out for selling opportunities. Now, there is one thing I would like to share with us on the 4 hours time frame to have a clearer perspective into what is going on here. Now, look at the 4 hours time frame. Now, if we go to as far back as mid-month of July, you will see that we have price is still within a lower lows and lower highs in this market. And when we connected that, it gave us this structure that you saw here. So price is back below that trend line, and it is likely that the chances of continued selling opportunity here further increases because of this observation we saw here. So I just needed to show you what things are looking like on the 4 hours time frame. So going back into the 1 hour time frame right now, how do we intend to capitalize or add more position to our existing trade? That is for those who still have a position running. Now, first and first here is to mark out some support levels here. We have one right here at the 15,300. That's a psychological level, considering the round figure of that price. And in fact, if price continues to remain below the 15,300 here, we shall look out for more opportunities to sell. So let me place this one right here. I would like to give this a wine color. So let's give this a wine color instead. All right. So that is our level right there. And I think we also have another one right below here. which is about the 15,000 15,275, I guess, 15,275. So let's mark that level out there and bring back our candle chart. Now, look at what is going on here. Now, when price came into the zone yesterday evening, we saw buy pressure resume around that area. And in fact, this time around, price action has broken down the 15,300, and it appears that the 15,275 level is now becoming a buying niche at this point. As you will see that in the last 3 hours, we've been noticing some buy pressure around the zone. Now, will this level be broken to the downside? If it does get broken, I will be adding more sell position to my existing trade here. So if it gets broken to the downside, definitely we'll be adding more sell position here. But if price action continue to find buy pressure around this area, between the 15,300 and the 15,275, then we might likely be seeing some bullish traction resume. But one thing we want to note here is that we are not going to be getting excited or joining that bullish momentum right away. Remember, price still remains below that descending trend line we identified here, remember? And secondly, this bullish momentum could turn out to be a retracement of that impulsive bearish leg. Now, if any bullish momentum comes in here, we might likely be seeing price come back into that descending trend line, which of course also shares a confluence with the 15,380 level that you have here. So you can see how it shares a confluence with that level. Let me mark that level out. You do want to be marking that level out on your chart right now. And let's see. So you can see that level has been a selling niche in the past. Look at what happened around this area. Yesterday's trading session, stroke the early hours of today, we saw how that area has been a selling niche. And for the fact that it also shares a confluence with that descending trend line, it's going to be an area to look out for. So if buy pressure resumes around this area, I wouldn't be jumping in because this is a counter trend opportunity for me. But if you are a counter trend trader, you might want to scalp that move, which will be dovetailing to about 75, 80 pips thereabout. But one thing I'm going to be doing here as a long-term trader is to wait to see how the market is going to be reacting to that trend line and the 15,380 to determine if we are going to be adding a buy position or getting ready to join another wave of bearish momentum. Now, if selling pressure resumes around this area where buyers find it difficult to break out of both the trend line and that level, then we'll have no other choice than to get ready to join another wave of bearish momentum. However, if price breaks out of the 15,380, a retest of structure with buying pressure on our lower time frame will be all we need to confirm that price is likely going to be going upwards. So if this happens, that is, we have a breakout of that descending trend line and the 15,380, we shall be looking forward to buying opportunities around that area. And in fact, we have multiple levels to maximize the potential of that move if price action continues to break out of them. So we have the 15,435. We also have the 15,475, the 15,525, and our key level for the week situated at the 15,450. So if these levels get broken to the upside, we would definitely want to be maximizing the move all the way up. So this is my view on buying the USTech 100. So if price climbs up, remember this area is a center of focus to see how the market will react to that zone to determine what our next line of action will be. Now, if price does not climb up and instead it continues to drop, I have mentioned earlier that we shall be looking out for selling opportunities below the 15,275 level. Now, for those who still have a sell position, make sure and do not forget to secure your current sell position. So these are my views here on the US Tech 100 for today. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your charts. All right. So, in the absence of no questions, I want to assume that we are all on the same page here, and all I've said so far has been quite explanatory. So, with that being said, let's move on to the next financial asset on our watch list. So the next asset on our watch list for today is the GBPUSD, and in fact this market has moved significantly well to the downside, and thanks to the comment from the Bank of England's Governor Baylis yesterday as regards to his uncertainty that there will be another interest rate hike coming up during the next interest rate decisions for the Bank of England. And as a result of this comment, the market has reacted negatively to that report, as we saw the pounds continue to nosedive all the way to the downside. And luckily enough for us in this community, we were able to capitalize on that move. Remember that we have been selling this asset since the beginning of this week based on the current market structure we have here. Though we had some buy position at the beginning of the week before the bearish momentum began. So let's run through how the week started for us. Initially, we saw this range where price was confined within the 1.26210 and the 1.25850 level to emphasize the level of indecision at that point. And remember, I told you I had a buy position triggered, and for those who missed out, that we could look out for more opportunities at the retest of the 1.26210, which of course we did, but unfortunately that move did not last long as we were taken out of that buy position in a loss. And thank goodness the market gave us an opportunity to recoup the loss we incurred as we saw the breakdown retest as we projected to incite the bearish momentum. And since then, we have been selling this asset. And for those who took advantage of this opportunity, well done and kudos to you for being on standby to have capitalized on this move. Now, during our live session yesterday, remember what we saw here, another simple setup after identifying this ascending trend line here and the 1.25600 level. Let me show you where that is. So we have a key level here at the 1.25600 area, which we said was a beautiful confluence to confirm if we are going to be bullish or bearish. And the only criteria we said here for us to buy is for price to break out of the trend line, which never did. Now, instead, we saw price break down, retest the 1.256 and that trend line to incite more selling opportunities. And for those who took advantage of this, well done to you, as you will currently be running with over 100 pips in profit right now on that single move. And remember what we said here yesterday, that we are going to be adding more positions if price action goes on to break down the 1.253. So with a sell stop order sitting right there, we had another sell position triggered as we rode that move again and right now that is running with about 70 pips. So you should be having a minimum of 2 positions running with 170 pips in profit right now, which is not bad at all for the last 24 hours. So once again, well done to everyone who are taking advantage of this opportunity. Now, the next thing we want to be doing as usual is to secure the current sell position. Of course, we want to ensure that all positions are well secured, as anything could still happen around this area. And remember that we want to be giving enough room for price action to breathe. So our stop losses should be anywhere above the 1.24900 area and the 1.25100 level. Let's secure our positions while we wait out for more opportunities to trade this market. So now with a well secured position on this chart, what is going to be our next line of action for today? Now, first and first, from the fundamental aspect of the market, we've talked about Governor Bailey's comment as regards to its uncertainty about interest rate decisions. And of course, Dingra also mentioned that monetary policy should be sufficiently restrictive and be based on economic data. So we're still in a limbo right now. The possibilities of an interest rate hike and the possibility of no interest rate hike is what is going on in the market right now. And since this is going on, we can begin to see the traces of market participants in that regard. As you will see here, we had consolidation phases here, which emphasized the indecision at this point in time. And in fact, in the last 4 hours, price action has been trapped within the 1.249 and the 1.246 to emphasize the uncertainty in this market right now. So the question at this point is, will price action reverse? Are we going to be having a reversal, or is there going to be a downtrend continuation? Well, for us to have an idea into what to expect, let's take an holistic perspective of this current market structure. And to do that, we shall be scaling up into the daily time frame. Now, look at the structure we identified here on the daily time frame. On Monday, we saw this, though price has been on a strong bullish momentum since the last quarter of last year, but interestingly, we noticed a pattern here which looks like a reversal pattern in the form of an head and shoulder pattern. So if I give a visual representation of what that looks like, you can see the left shoulder right here, we have the head, and of course we saw the transition of the right shoulder into this structure that we have here. Now, with this potential reversal pattern at the beginning of the week, we had our neckline marked out, which coincidentally falls along our key level for the week at the 1.2600 area. And since then, we saw price break down that neckline to validate that reversal pattern. Now, the question here is, how far will this bearish move go before another wave of bullish momentum will happen? Are we going to see price come back to do some retest of structure in anticipation of a downtrend scenario, or price will just continue to roll all the way to the downside? Now we have an event coming up today. Remember, we talked about the initial jobless claims, which is coming up later today, and of course we have a lot of speeches coming in from Fed official today too as well, which will of course be giving us an insight into the health situation of the United States. And of course, the anticipation of this event is going to be reflecting on the charts. And this will of course give us clues of what to do next. Now, with the scenario we have here, let's go back into the 1 hour time frame. Now, on the 1 hour time frame, this is where our center of focus will be. Now, first of all, let's acknowledge the momentum in this market on the 1 hour time frame. So if you look at what has been going on here since last week Wednesday, it's over a week now, price action had consistently and uniformly found lower highs and lower lows to further buttress the strength of the sellers in this market. Now, since price remains below the trend line, it makes quite a lot of sense that we continue to look out for selling opportunities. Now, our center of focus today will be between the 1.249 and the 1.24600 area, where we have seen some uncertainty in the last 3, 4, 5 hours now. So if price action continues to the downside, breaking down the 1.246, we shall be looking out for more selling opportunities in this market. However, if price breaks out of the 1.249, which I doubt will happen, but if it does happen, we want to be on standby for it. If it happens such a way that price breaks out of the 1.249, I wouldn't be jumping in right away, as remember, price still remains below the descending trend line. So there are chances that price could come back into the 1.253 to incite a sell-off if buyers find it difficult to break out of that descending trend line. So for scalpers, for counter trend traders, you might want to capitalize on the breakout retest of the 1.249, which will be dovetailing to a minimum of, let's see how many pips that is, that's about 40 pips thereabout, where we want to exercise some patience when price gets into the 1.253 zone, a level which shares a confluence with that descending trend line. So at this point, all stop losses should be moved to break even, secure the counter trend buy positions, while we wait out and see how the market will be reacting to that zone to determine what to do next. Now, if price breaks out of that trend line, then that will be a beautiful sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And if this happens, I would like to see some retest of structure as a confirmation to join the uptrend continuation. So that is how we are going to be maximizing a bullish momentum here in this market if the market moves in that direction. But if price continues to find lower lows and lower highs here, we shall continue to look out for selling opportunities below the 1.246. So these are my views here on the GBPUSD. It's a simple setup. Let's mark these levels out on our chart and use them as a reference point to guide our independent trading decisions for today. If you have any questions, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the last financial asset on our watch list for today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the last asset on our watch list for today. So the next asset on our watch list for today is going to be my favorite, the XAUUSD, popularly known as the gold spot. And in fact, this is another tremendous sell setup we had here on the XAUUSD. And in fact, there was no point in time we were considering buying, as price action remained below those descending trend line. And in fact, if you are taking advantage of all the levels we marked out at the beginning of the week, you will be having a minimum of 6 positions running right now, with over 600 pips in profit in all positions. And for those who took advantage of this opportunity, well done to you for being on standby to capitalize on that move. Now, before we begin, let's run through how the week started for us here in this community and what led and incited the idea of selling the XAUUSD. Now, at the beginning of the week, though price action started on a bullish note, remember we saw this buy bullish pressure resume around the $1,939.50 level. Price climbed up. We saw a barrier at the 1,946 as buyers found it difficult to break through. as sellers drop price back down into that support line to give us a flat channel to work with, and which also further emphasize the level of indecision at that point in time. Now, with that scenario there, we already have a structure to work with, as we waited for either a breakout of the resistance line, which of course never happened, or the breakdown of the support line to give us an opportunity to sell. So at the breakdown of the support line, we had our first sell position for the week triggered, as you will see here, and since that moment we have continued to sell the GBPUSD, as you will see right here. We continue to sell, had more position as price action continues to break down this level. So you can see we had multiple entries to maximize the potential of this bearish move. So well done to everyone who are taking advantage of these opportunities. Now, with that being said here, the next thing we want to be doing, I do hope you've moved your stop losses accordingly, because anything could happen at this point in time. Now, ensure all stop losses are placed right above that ascending trend line. So anywhere above the 1,921.50 and the 1,924 area seems most appropriate to secure this current sell position. So with a sell position secured at this point in time, what is our next line of action for today? Well, I'm beginning to see a simple setup gradually evolve on this chart right now. And one of the things I saw this morning while trying to dissect this chart, looking out for where price is likely going to be going for the second half of the week. Now, the first thing I observed here is this rejection at the 1,916, as we saw how sellers struggled to break through that area. All attempt by the sellers to break through was met with strong resistance from the buyers, as you will see. Continue and multiple buy pressure resumed around that area, pushing price to the upside. And not only pushing price, it began to find higher lows as price continued to climb up. And what does this tell us when you start seeing higher lows on your chart? It tells us that buyers are gradually gaining momentum. And the next thing we will be doing when we see such a thing is to connect the series of higher lows to give us something to guide our trading decisions for today's trading session. So I would like to give this a blue color. So let's mark it out on our chart. We have an ascending trend line, which we shall be using to guide our moves for today. So if price remains above this ascending trend line, we are likely going to be seeing a reversal move. Now, if you look at the structure closely, you will see after multiple rejection here, price action appeared to be transitioning into a reversal pattern. And you know how we do it. Whenever we identify a reversal pattern, the next thing we do is to identify the neckline that we shall be using to maximize, to validate, the potency of that reversal pattern. So we have a neckline at the 1,920 level, which interestingly shares a confluence with that descending trend line, as you will see here. Now the question is, will that trend line be broken? Will that neckline be broken to confirm a bullish momentum? Well, that is where I will be positioning myself for buying opportunities in this market. So there are two ways to which you can capitalize on this one. If you can afford to risk some of your profit so far this week, that is leveraging on the profit you had made so far this week, you can place a buy stop order above the 1,920 level to capitalize on that potential uptrend scenario. However, if you are new and this is going to be your first position for on the XAUUSD, then you want to be waiting for a retest of structure as a confirmation to join the uptrend continuation. So that is how we are going to be buying the XAUUSD today. So we are looking at anywhere above the 1,920 as an opportunity to look out for buying opportunity here. Now, one thing about this structure here is, if price breaks out of the 1,920, it will also have broken out of that descending trend line, which happens to be the first time price will be breaking down of that descending trend line since last week Friday. And this will be a good sign that the trend line may no longer have the capacity to continue to negate that bullish attempt. then giving us a beautiful opportunity to join an uptrend continuation. So that is how we are going to be buying on the XAUUSD today. So you mark that level out. The 1,920 is a key factor to guide any buying opportunity in this market. However, if price action continues to drop to the downside, then I would like to see a breakthrough of the 1,916 to start considering adding more position to my existing trade. In fact, a breakdown of the 1,916 will have taken out all the buy positions here to further emphasize the strength of the sellers in this market. So we shall be looking forward to breakdown of the 1,916 for selling opportunities in this particular market. So I wish we be on standby to capitalize on any of this move when it finally happens. And remember, we have series of events today that has the capacity to influence the market sentiment. So let's be on standby. All our existing positions must be duly secured, as this event or the anticipation of this event could stimulate some volatility in the market. So these are my views on the XAUUSD for today. So on the XAUUSD, our center of focus is between the 1,920 and the 1,916, where we shall be looking out for either a breakout or breakdown of this range for an opportunity to buy or sell. So let's see how the market will play out. You do want to be marking out these levels, as you will be needing them as a reference point to guide your independent trading decisions. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds as usual to see if there are any questions before we draw the curtain for today. All right, so I see a handful of comments in the comment section. I see Nipsey, I see Can786, I see Adrinas, 12592, 38648, 22475, 3005, 8132. You guys are wonderful. And in fact, I'm very grateful to have you guys around with us till the end of today's trading session. And in fact, it was an interesting and insightful one. So we were able to attend to 4 major assets today. The USOILSPOT, the USTech100, popularly known as the Nasdaq, the GBPUSD, and of course the XAUUSD, where we were able to identify simple setups using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insights into the market, hereby giving us enough information to position ourselves ahead of the New York session today. So let's see how the market will play out going forward. I wish you all the best of luck. For those who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here. But trust me, the more time you spend with us, the better you get in understanding how this works. So I look forward to seeing more of you tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come back here again to review how well these assets have been doing, and at the same time get ready for the last trading day of the week, which promises to be a very interesting one. Do have a wonderful evening, everyone. Bye bye.